welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio in Times Square, New York City, we have Caleb Silver, editor-in-chief over at Investopedia, and we're going to talk about investing during a recession. It is great to see you, as always, back in studio with us. And Caleb, we keep hearing about this word recession and investing and what it means for the economy. But what are the basics of a recession?
Yeah, the drumbeat around recession is getting louder and louder. And people should know it's not a bug in the economy, it's a feature of the economy. This is a downturn. We're going through a downturn. Now, when you talk about what a recession is defined as, it's a basic downturn in a bunch of different economic factors. Less production, less consumption, less business spending, maybe more layoffs. But it usually lasts for a quarter or two, usually 2 quarters in a row of negative GDP growth, gross domestic product growth. That's considered one of the harbingers for a recession. So you don't know you're in one until you've been in one, but the fact is we could be in one right now and not know it for about 6-7 months.
What about stock market performance during recessionary periods?
The stock market doesn't do well during recessions for obvious reasons. We have less to spend, and since we're using the money we make to spend on the things we need, that discretionary spending that we might use for investing and saving, we don't really put it to work in the stock market. And typically folks get a little bit scared and start to sell some of their assets and their stocks. So the stock market usually declines during a recession. The average decline is something like 36 or 42% during a recession. That said, we've had recessions where it only goes down about 20%, and we've had recessions where the stock market's gone down over 50%, like the great financial crisis.
Yeah, well, there could be opportunity as well. So how do you think about investing during a recession?
Yeah, well, the first thing you want to think about is playing defense. But it all starts with doing that accounting in your own home, in your own household. Where are my expenses? What am I spending money on that I don't need? And where can I make those cutbacks? Cutting that high interest debt. And then when you want to put money to work, you got to think about defensive sectors. So healthcare is traditionally a very good sector during a recession, usually performs pretty well. So do consumer staples, the things we have to buy in order to survive. And then you want to think about dividend-paying stocks, stocks that pay you no matter if the stock goes up or down. You're going to get that dividend check every quarter. Those are typically the areas that do well during a recession. The good news though, Jill, is that as soon as it gets darkest, the light starts to come up. And out of a recession, the stock market tends to do very well.
Yep, keep that long-term investor thinking cap on. Caleb, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.